Hi there, I'm Dogozo Kumalo, South African finance writer and business journalist. Thanks for joining us on the SME.TAX Podcast. We aim to support entrepreneurs looking to scale their business, unpack complex financial terms and content. Now that's everything from taxes to finances and other nitty-gritties around entrepreneurship. Our objective is to be the unseen hand supporting entrepreneurs by offering a single point of entry, transferring knowledge that you can apply in your business to help grow our economy. Now, it's important to tell your rand where to go before the month begins, which is why in this episode, we will be focusing on working on a budget and sticking to it. But what exactly is budgeting? In simple terms, it is a finance plan that allocates future personal income towards expenses, savings, and debt repayments, allowing you to know in advance whether you will have enough money to meet all your needs and wants. Now, learning to draft a budget starts with first setting up your short, medium, and long-term financial goals. Having these goals for your money not only helps you make smarter spending choices, but also gives you a clearer picture of what you want your financial future to look like. You need to identify all your income and expenses, differentiate between your needs and wants. You need to pay your rent, but do you really need those latest pair of Jordans? No, you want them. Next, you need to design and balance your budget to make sure your income outstrips your expenses. This means you may need to trim some spending fat to find the right balance. Finally, once you have allocated funds for your essentials like housing, groceries, and transport, as well as debts and savings, it's time to act on the budget and stick to it each month. So here's the thing. Before you can make money as an entrepreneur or small business owner, you have to figure out how to spend it. So drafting a budget is a key way to help you turn your dreams for business success into reality. With that said, let's bust some jargon with SME.TAX. Accounting. Accounting is a system of recording and summarizes all businesses' financial transactions. Income is money received into the business on a regular basis, while expenses are the costs incurred in the business or required to keep the business operational. Revenue is the total income made by the business over a particular period, while a loss is when expenses surpass revenue either due to a single business transaction or the sum of all transactions for that particular accounting period. Cash flow is the net amount of cash and cash equivalents transferred in and out of the business, and a cash flow statement shows how those changes in the balance sheet accounts and income affects those cash and cash equivalents. When a business has made a profit, it means revenue generated in that particular accounting period exceeded expenses, costs, and taxes involved in sustaining a business. A profit margin, meanwhile, is the ratio between turnover and profit. In other words, it's the percentage of revenue that remains as profit for the business. A return on investment, or ROI, is a performance measure used to evaluate the efficiency of an investment or compare the efficiency of a number of different investments and whether it is worth the investment or not. Now, clearly understanding these terms can go a long way in helping sustain and grow your business. Do follow us on social media for more discussions around the jargon we bust today. And for any other questions, we are at SME.TAX on all social media platforms. That's it for this week. Do join us for our next podcast where we'll get to understand the difference between savings and investments. You don't want to miss it. I'm Dogozo Kumalo. Till next time.